Okay, we're live. Sound check. 1, 2, 3. And remind me to go slow if I'm going too fast tonight. Welcome back, everyone, to another live trading session and Q&A session. So if you have any questions regarding your trading, do ask. And that's the whole point of the webinar. Okay, sounds seems to be good from my side. If there's any issues, do let me know. Okay, before we begin, just a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general advice, as the information or advice given does not take into account your particular objectives, financial situation, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFD and Forex are leveraged products and thus carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. With that said, we can just jump straight in and let's talk a little bit about the dollar index. This is something that we need to talk about, considering how hawkish the FOMC is, how the yields are. We're going to take a look at yields curve as well. And just about a month ago, we were talking about 2% on the yield. It's now 2.3, 2.75. So yeah. Let's take a look at dollar index. You are normally not going to take a look at dollar index, so it's quite a rare chance that we get to see dollar index. We are now above 100. Today's going to be the day if we get a confirmation if it stays above 100. So there's actually a lot of stuff that's related to the US dollar that's actually going to be on the fence today. Right, it could be pound USD making a reversal or dollar yen making a reversal. That is to be seen. We don't have confirmation at this point in time from the daily chart. Just want to let you know that the daily chart on the dollar index, it's actually above 100. So a lot of traders actually are out of the market. And leading up to the long weekend, by the way, if you guys haven't caught up yet, Friday is actually going to be a holiday. And in a lot of Western countries, Monday is actually going to be an Easter Monday. Okay, so it's a very long weekend, going from Friday all the way to Monday. So you are going to see liquidity dry up. Just be a little bit more cautious. If you have a weekly position that you need to take care of, please do take care of that position by tomorrow, because going Friday, market is actually going to be closed. So yeah. All right, guys. Just to note that this is an English session. Do type your question in English and I'll be answering in English. Just to do so helps out everyone that's jumping in and, ask your questions in English. It's going to be much appreciated. It's just going to be a lot more respectful to everyone as well. So anyway, dollar index, for those that are just joining in, we are above 100. I did mention the outlook that how hawkish the FOMC is, and if dollar yen is above 125, it is going to trigger this movement to 100 on the dollar index. We have seen that the past, basically since Monday, but today is the day. It's actually above 100, close to 150 on the index. This is very, very strong for the US dollar. I just don't know whether it's going to stay strong for the rest of the week or we are going to see a little bit of a correction here and there. Okay, so that's going to be the main focus for tonight. We want to see how strong is the US dollar, what are the things you need to be cautious about, and let's take a look at the 10-year yield. This has actually reached 2.8. Now, I did mention that earlier in the month we were actually looking whether or not the yield is going to break above 2%. Okay, we are way above 2%. 2% is just down there. We are past that. We're past the 2%. So the yield is actually strong. This tells me one thing. There's a lot of things, but one of them is this. The currency market has not priced in how hawkish the FOMC is going to be. In terms of interest rate hikes, projected hikes are going to be in 50 basis point for May, and then there's potential of another 50 basis point in June. All right, so we're looking at a very aggressive FOMC. I think pretty much a 50 basis point in May. I think that's pretty much confirmed, or at least if you want to, if I can put it in percentage, it will be above 90% in terms of whether or not they're gonna hike 50 basis point in May. All right, so I think we are seeing that happening right now. The 10-year yield is way up, but it's due for a little bit of a correction. In terms of 10-year yield correction, I think we're looking at about 2.4, 2.5%. Again, I know a lot of you probably don't have the 10-year treasury yield, but it's good if you can find that online, somehow figure out a way. Just take a look at the 10-year yield, just base it on a daily chart. That's completely fine. That's how the market look at it. But 2-year yield is actually back below 10-year yield. So I think in terms of short-term momentum, we are losing a little bit of a momentum. We might be due for a little bit of a correction. Whether it's going to happen tonight or tomorrow or maybe Monday, we don't know yet. Okay, but that's the thing. You need to be cautious about a potential correction happening in the US dollar. Now, if you take a look at dollar yen, this is basically our go-to indicator. If you don't have a dollar index or the 10-year treasury yield, we're going to be looking at how strong the dollar is via the dollar yen. This has reached its target at 127.2 and its cap at 126. The daily still has a little bit of a room to push higher, but I mean, if there was a question just now, if you were holding a position since the 31st of March, what should you do with the position? Are you going to hold it off to 127? What I can say is don't get too greedy. I think every market that goes up needs to have a proper technical correction. We might be due for that correction at least on an intraday scale. We are unable to progress above 126. If you have a position in dollar yen, maybe you want to scale out a little bit on around the 126 mark. I'm not saying that this is going to correct itself all the way down. We are looking at strong supports being built around 124.50. So if you are trading dollar yen, be a little bit more cautious. Price might go back to test 125, 124.50. You really want to be careful around that area. It is, it's quite a way to go. I mean, you're letting go of around 75 pips or 80 pips from where we are right now. So be a little bit more cautious. Don't get too greedy. Scale out your positions if you do have long positions in dollar yen. One of the few reasons why I'm a little bit concerned about the dollar strength is where the pound USD and the Euro USD is. Let's take a look at Euro USD for a minute. This has actually found support. Let me just go through the daily so you can see. I'll switch here. Okay, so we actually have a projected support at the March 7th of March low. That's around 1.08. So we actually broke through support below 1.0950 and 1.0850 in the past week. Right now, this is looking like it's actually oversold. We don't have that confirmation yet, but I'm just giving a quick heads up. Price is actually finding a lot of support at 1.080, 1.08, right? We got ECB tomorrow, and we got the inflation numbers coming out from the Eurozone and the UK. We just got the inflation number from the UK today, and that was 7% versus 6.7% consensus. It is higher than expected, and we're looking at not just the FOMC that could turn hawkish. We could potentially see Bank of England and ECB taking a more hawkish stance as well. So, just a quick note on the Euro USD. This is starting to slow down a little bit in terms of how fast it's going down. We are looking at support to come in at 1.08. If it does break below 1.08, then sure, we are going to be looking at further, extension to the downside. But at this point in time, the limit is pretty much around 1.08. So you could be looking at support being built around 1.08. We'll take a look at sterling yen in a minute, but let me just go through the US dollar part. And by the way, if you guys are new here, if you have any positions you want me to look at or any pairs you want me to look at, just type it in the chat and I'll have a look at it. What factors driving gold rally despite the rising US 10-year yield? We'll take a look at gold in a minute, but let's focus on the Euro USD part and the Pound USD before we go to commodities. So don't worry, gold lovers, we're going to talk about gold, we're going to talk about oil, but we'll touch on the currency first and then we'll move on to gold. Okay, so, right. Let's define our base for Euro USD, and tonight I'm actually going to do it a little bit different. I want to focus a little bit more on the price action side of things, so let's clear up the momentum so you don't get confused. This is the daily. We're looking at a potential floor at around 1.0805. Round it down, it's 1.08. Now, if you bring it down to the hourly time frame, this is actually starting to flatten out a little bit. We do have a support trend line that's being built. It hasn't been tested much yet. So right now it's actually forming more of a channel. So be a little bit more careful on this one here. We actually have a channel as well on the Pound USD. But right now this is for the Euro USD. If you're planning to go long Euro USD, make sure your stop loss is not too far from 1.08. Okay, so I mean, in this current situation, we might be looking at a potential counter trend trade, and we are basing it on this. So if on the hourly perspective, if you want to go long, you can aim for the 61.850% correction, at least on the hourly, if you are planning to go long intraday. Stop losses should be below 1.0805. I don't want to have it any further than 1.0795. Right, in terms of target, that's pretty much it. In terms of risk to reward ratio, you're looking at about 1 to 1, right? But if it does break this channel to the downside, you need to be a little bit more cautious with Euro USD. In terms of correction, we already got our correctional level. It is around 1.0860 to 75. That's basically it. Risk to reward ratio is 1 to 1. Not too keen on Euro USD because we still have ECB tomorrow. There's a lot of things that could go wrong or could go right. It's just too early to jump in on Euro USD, especially considering where it is and how big the range is. Let me just clear this off again. But yeah, I mean, if you do want to go long intraday, you could go for that. In terms of pips, it's not much. You're risking about 38 to the downside, maybe 35 to the upside. But yeah, for this to actually kind of reverse whatever it's doing, it needs to break or have a close above 1.09. So an hourly close above 1.09 will flip this, and it's not the time now because right now, maybe up until tomorrow, we're actually going to be between 1.08 and 1.09. I know you're saying for an intraday trade, it is about 100 pips range. To me, it is 100 pip range. If you do want to go long, make sure your stop losses is at 1.0795, just slightly below 1.08, but I don't want to have it any lower than that. If you do want to go long at this point in time, you could. Momentum wise, it's not looking great, right? I mean, it could just flatten out at 1.08. So if it does bounces off from 1.08, look, the closer it is to 1.08, I think the better chance it for you to actually jump in on Euro USD. As long as it stays above 1.08 on the daily, there is a chance it could actually flip tomorrow. So just be a little bit more cautious with Euro USD. Now, Pound USD, this is actually flat at 1.03. Let me just give you the daily. Right. Fibonacci extension wise, I believe this is that. Was it this one? Let me just check. Okay. All right, it's on a much bigger fib. It's actually from the 8th of December to 13th of January, so it's that big swing here. We are actually at 127.2, I believe at 1.3. There we go. All right, we are right at 1.3. In terms of range, from the outlook, what I mentioned was that Pound USD was pretty much range bound until it breaks below 1.3 or breaks above 1.32. Now, we're not seeing that happen. We haven't seen that happen yet. We could see that happen tonight. If it does close below 1.3, then we actually want to stay sidelined from the Pound USD. I mean, in terms of swing positions, considering that tomorrow is basically the last day of trading before the holiday, might just want to wait until Monday. But if you're trading intraday, that's a different proposition. We actually have a range to trade on, which is this and this. You can base it on a breakout strategy. Momentum wise is actually flat neutral right now. If it does break to the upside, then you can go long from here. Taking a look at the range, that is about 50 pips in terms of downside support. So we could be targeting, close to 1.3075, right? That's going to give you about 50 pips to the upside. Now, if it does break to the downside, there's actually a lot of room to go for pound USD because the last support is actually going to be at 1.3. We are going to be looking at a psychological support at 1.2950 and then 1.29. So if it does break below 1.2975, about 25 pips to the downside, and then you could be aiming for 1.9, 1.925. That's going to give you a good risk reward ratio even if you're aiming for 1.2925. I would be aiming for 1.29. I think the pound USD is going to move in a whole number. So that's your two possibility. Right now you're actually right in the middle. I think we got PPI numbers coming out in 30 minutes time, but I don't think it's going to have a huge impact in the market. Okay, let me just pause for a little bit. I'll go to the questions. We'll take a look at Aussie USD. What factors driving gold rally despite the rising US $10 yield? How about sterling yen? New Zealand after rate hike, how's the movement prediction? By the way, we have New Zealand hike. I forgot to update you guys, but we do have a hike today to 1.5% for New Zealand. I don't think it's much of a movement, but we'll take a look at New Zealand USD. Let's just go through the requests first. We'll take a look at Aussie USD and then Aussie Yen, whatever it is. Okay, Aussie USD, I think we're back to square one from last week's outlook. During the webinar, we were looking at 74 cents. 74 cents still holds. And I think right now, in terms of momentum, this one can pull back down to 73, and that's still okay. It can even pull back down to 72.50, and it will still be okay. In terms of correction, it should be limited to about 78.6%. That's about 72.75, right? In terms of correction, it could break below 74 and bounces up on the hourly, and that's completely fine. What we're looking at here is potential, as I said, the dollar strength it's a little bit questionable from an intraday perspective or a short-term perspective. I think we could be looking for a little bit of a technical correction to happen. Aussie USD is really strong. It's pretty strong right now. Even if it does break below 74 on the hourly, it could bounce back up. So the daily could be at around 74 cents. We're looking at 74 cents to hold on right now. Momentum still points to the downside, but even if it does pull back down to 72.50, it's still going to be okay. It's still going to form a hidden bullish divergence on the hourly time frame. So right now, we're still looking at 74. I don't plan to go short on Aussie USD intraday wise. Unlike the pound USD or Euro USD, this is positioned differently. We do have a lot of support for Aussie USD. So in terms of Aussie USD, it can pull back down to 72.50 and it'll still be fine. I can clear off the resistance here and we'll focus on 76. Let me hide the Ishimoku for a little bit so you guys can see a little bit more clearer. In terms of support trend line, we do have support trend line building up here, and that's going to hold it. We might see a little bit of a dip below 74, but as long as it doesn't go below 72.50, we should be okay for Aussie USD in terms of technical correction. We're still looking at a potential hidden bullish divergence happening on the hourly time frame. So yeah, Aussie USD and Euro USD, they're positioned differently, so take it. I mean, you have to have a different angle on these two. They're not really the same, right? Okay. So Aussie USD, I think we can say that Aussie USD is still strong. If you're looking for an opportunity to trade on Aussie USD, then you want to scale in on your longs or you want to start looking for a long position. If you're planning to go short, yeah, I'm not here to stop you from shorting Aussie USD. If you do want to go short Aussie USD, make sure your stop losses is above 76.50. That is behind that high over there, give or take, about 76.50. Okay. Aussie Yen. We'll take a look at New Zealand after this, but any of you trade New Zealand? All right, Aussie Yen. We are clear. We're still capped by 94. Nothing much. That's why we haven't talked much about Aussie this week. Not even on the outlook, because it's actually pretty flat, right? It's supposed to be in an overbought condition. We could still see that happening as long as it doesn't bypass 94 on the daily time frame on the Aussie Japanese Yen. I'm still looking at a potential correctional phase on the Aussie USD and the Aussie Yen, right? Aussie USD, we take a look at it from the hourly perspective. We haven't taken a look at it from the daily. So, sorry, it is from the daily. I'm sorry. Sorry, I thought this was on the hourly. On the daily, this is forming a hidden bullish divergence. So be on the lookout if you're looking for a position on the Aussie USD. I would say look around 74 cents. If it doesn't break below 74 cents, if it keeps bouncing up from 74 cents, maybe that's your cue to go in long on Aussie USD. Just place your stop losses below 73.50. Should be okay for an intraday trade. If you're looking for a swing trade, wait for the momentum to turn around, okay? But for the Aussie Japanese Yen, we haven't seen a proper correction yet, partly because of yen weakness. We just haven't seen that happen here on the Aussie Yen. Now, in terms of support, we still have 91, 90 yen. I'm going to clear off 87. We don't need 87. We just need to focus on 91 and 90. In terms of correction, that's about 300 pips. I think that should be enough room for correction for Aussie Japanese Yen. If you're planning to go long on Aussie Japanese Yen, make sure you wait for a daily close above 94 yen. Okay, we don't want to take any risks. It might be too early to jump in. Momentum still points to the downside on the daily. If you go into the hourly time frame, it's still pointing down. Let me bring back my Ichimoku cloud. So you can see very clearly here, Tenkan is below Kijun. That's short-term correction to the downside. We might break below the Ichimoku cloud, then we could see a deeper correction on Aussie Japanese Yen. So be a little bit more cautious on Aussie Japanese Yen. You can be long Aussie USD and go and short Aussie Yen at the same time. They're not going to go in the same direction most of the time anyway. Okay, so we got Aussie USD, we got Aussie Japanese Yen. How about Sterling Yen? Okay, how about Sterling Yen? Let's take a look at Sterling Yen on the daily. Actually, let me just clear this off. Right, so we got a clear look on the Sterling Yen. Still points to the upside. I think we're still capped by 164. Yeah. So I think all the yen. I'm sorry about my voice. I'm actually gonna go have it checked out tomorrow. There's actually a problem with my larynx, my voice box. So that's why I keep doing that. I keep losing my voice, right? Anyway, selling in 164. That's going to be your main focus. If the daily closes above 164, then you're good to go. But I think with all the yen crosses, it's pretty much capped. I think we're going to be looking at the similar scenario with Euro Yen. But from Aussie Yen and Sterling Yen, Aussie Yen was capped by 94 yen, 164 yen for Sterling Yen. That's still being capped. So if you are planning to trade intraday wise, you could be positioned for a short, and that's still okay. And it's actually much better in terms of stop losses. At least we got 164.25, right? In terms of target to the downside, we could be looking at a return towards 163. That is still going to be within the Ichimoku cloud. It's going to give you about 1-to-1 to risk reward ratio. It could potentially go even lower than that. We could be looking at a potential extension here on this one. Therefore, you could be looking at a potential return towards 162.50. Okay. That's going to give you about 2-to-1 risk to reward ratio. Right now, in terms of sterling, I want to hold off a little bit, but sorry, pound USD, I'll hold off a little bit on the cable. But on the sterling yen, we are actually closer to resistance right now than support. So you could actually go short right now. Just make sure your stop losses is above 164.25. You don't want to risk anything more than 164.25. This is actually going to be a great risk reward ratio for you guys, right? I mean, you can scale out at 163, then leave the rest towards 162.50 on the sterling yen. But for sterling yen, I much prefer to go short on sterling yen rather than going long right now, because on the daily it's capped by 164, momentum points to the downside, etc., etc. I much prefer to go short sterling yen. Okay, I don't have that much confidence on the pound USD. It's just a completely different scenario, right? One is actually at the top, one is actually moving around support. So I much prefer to go short sterling yen than cable. Right. Let's take a quick look at Euro Yen. I think we are looking at the similar situation with Euro Yen. This is cap, right? We can see that being capped. We are above 127.2. I'll keep 135.50. I'll keep 134. I'll get rid of this one. Support trend lines. Yeah, I'll get rid of it. That's fine. Okay. I'll leave 130, but that's pretty much it. We are capped by, I believe, 137. Not even. I think it's about 136.50. Okay. Euro Yen is actually capped by 136.50. It's not even 137. 136.50 is going to be your cap. If you want to go short Euro Yen, I think it's a good scenario to go short right now. Stop losses above 136.75. I'll pull it about 136.80. In terms of target, we are going to be looking at 78.6%, 135.75, and then you can move it to 135.50. We'll take a look at 135.50. That's going to give you about 1 to 1.5 risk to reward ratio. Risking 54 pips for a potential of 75 and potentially even more if it does move back down below 127.2. You could be looking at about 100 pips gain for a Euro Yen. So I think for tonight, Euro Yen and sterling yen are good choices if you're trading intraday. I'm a position trader, so I'll wait for the daily. But if you're trading intraday, I think sterling yen and Euro Yen are a good choice. Not the dollar yen. Do not go short the dollar yen at this point in time. Just don't. Not yet. Okay. New Zealand, we got the hikes. Obviously not doing much and doesn't even mean much. That's why I barely even talk about it on the outlook this week. But yes, there was a hike, but this is nothing to offset FOMC. So if you're looking at this one here, oh right, there's a hike, but it's not moving that way. The hike doesn't take effect immediately. The hike will take effect in about 3 months to 6 months time. But let me just clarify one thing. RBNZ has been hiking interest rate, but it's still pushed down by the dollar, right? And we'll see it right now. We are in the momentum. We are in a correctional phase. We could be looking at support around 67. And just to make sure, I'll go by Fibs. But we are looking at about 67.25, 67 support area for New Zealand USD. If you're planning to go long on New Zealand USD, make sure there is a bounce around 67. If you don't see that bounce and price actually closes below, US PPI up 1.4%. Consensus was 1.1%. This one just came in. Right. New Zealand USD, I don't find this interesting at all. Core PPI 1%, consensus was 0.5%. Anyway, sorry. News just came in. PPI numbers are much better than expected. So again, New Zealand USD is not my forte. I'll just be frank with you. I don't trade New Zealand USD, but considering how RBNZ is hiking interest rate and price is still moving this way, the economy is just not big enough to offset the US economy at this point in time. So Not much of a deal here for our New Zealand USD. Intraday wise, I don't think it's a good idea to go short New Zealand USD. It's just overextended. Right now we are about 161.8, 67.50. You could be looking at a support here, but again, I don't want to go short or long New Zealand USD. I much prefer to go short, but not at this point in time. I might want to see a little bit of a pullback towards 68 if you are planning to go short. If you're already short, then yeah, you might want to scale out a little bit. Okay, nothing much on New Zealand USD. New Zealand Yen, unlike Pound Yen and Euro Yen, this one, it's a little bit too late to go short. Taking a look at it from the daily perspective, it is choppy. It's actually pretty flat. It's not even a wedge. This is actually pretty flat. It could be forming an ascending triangle, or it's actually forming more of an ascending triangle, so I'll be a little bit more cautious on this one. It is capped, I believe, at 86. Okay. If it does break this, then yeah, we could see a little bit of a correction for New Zealand yen at this point in time. I just don't see that happening. I think this is pretty much range bound between 86 to 84. If you want to cap it, that's your cap at 84 there. Okay, so if you plan to go short, just keep an eye out on 84. It might bounce off from 84. So 100 up, 100 down, it's up to you. I just don't feel it's time to go short New Zealand yen. Okay. All right, let me go through the questions. We talk about selling yen. Conflicted data yesterday, although I know that it means a stronger US dollar, but I don't know how big the retracement, whipsaw is going to be because of conflicted data, so I decided to close out my position. It's still running profit, but I kind of regret what you did yesterday, so psychologically you feel that you took the wrong move. To me, it's just this. You square off your position with profit, just be happy with it, right? A lot of people probably got they got losses. So just think about it this way. You're off with profits. You know, you regret your decision, that's okay. It's completely fine. I think for a trader, I'm talking a little bit. This is a Q&A session and LTS, so it's actually you can mix it up, okay? Let's talk a little bit about psychology here. Just be happy with the decisions. It's not a matter of, you know, you being right and you booking a lot of profits or you booking a lot of losses. I think it's a matter of whether or not you're going to be consistent. If you closed your positions yesterday, what was the reason you closed that position for? Okay. And then was it the right decision? Then maybe next time you can apply it to your trading. I don't think it's a great thing to mull over it. The position is already closed, right? No matter what you do, you just can't rewind time. That's the way I look at it from, when it comes to trading. Every decision counts. And if you make that wrong decision, I think you should be okay with it. I mean, you're still in profit, you're not in losses. That's a good thing. So, yeah. Not a gold fan, just being curious with the current gold movement. We'll take a look at gold. Criteria to stop loss or take profit. Any briefing? I think we pretty much gave it out just now. Aussie Yen, we took a look at Aussie Yen and I threw a stop loss on break even. Aussie Yen is capped at 94. I would probably get out of that long right now for the Aussie Yen. Okay, New Zealand, we talk about New Zealand. I explain about New Zealand. Is it okay if you enter short Euro Yen right now? We talk about Euro Yen, and yeah, I think Euro Yen it's good to go short. Noted. Okay. Okay, I'm catching up with the chat right now. Range for US, all UK, all US30, Ethereum, Bitcoin. All right, calm down. Yep, PPI number just came out. Euro AUD, long position 1.459. I'm stuck Euro USD 1.11249. Any hope to come to at that point? Ooh, okay, you went long. around that key resistance level. Let me just go there, right? Possibility of it returning to 1.1125, I'll be honest with you, is actually pretty tough unless ECB tomorrow announces something that's hawkish. It could be that they'll end their asset purchases. They're not gonna hike interest rates, so don't be swayed by any news that ECB is gonna hike interest rate tomorrow. It's not gonna happen. They might cut off their asset purchases. That could happen, and that's considered hawkish. If it does happen, then yeah, we could see a little bit of a strength for the Eur Usd in terms of whether it's going to go back there. Eventually, it will go back there. In terms of how far down it's going to get dragged down, that I don't know. But right now, we're looking at support around 1.08. Now, I don't know how strong and how fast the bounce off is from 1.08. So, if you're dragged down by that much, where was your initial stop loss? Because if you went long at 1.1125 and you get dragged down all the way down to 1.08, it means you're trading without stop loss. If you are trading with stop loss, then you wouldn't have asked me that question whether it's going to come back or not. So this is a little bit of a psychology for you guys there. If you start hoping for something, that means you're wrong and you already know that you're wrong. Is it going to go back there? Eventually, it will go back up there. I don't know how far it's going to drag it down first. Okay, it could be dragged down to 1.06 for all I care, right? There are supports. We don't have a lot of supports until 1.06, in all honesty, below 1.08. So, could it bounce back up? Yes, it could. Is it definitely going to go back up to 1.1125? Probably not. Is it going to go back up to maybe 1.0950? I think so. But is it going to go beyond 1.0950? That would depend on how ECB is going to act tomorrow, because the inflation numbers was out in Eurozone. It was high. The question that I have right now is, do you have a stop loss? Because from the looks of things, you went long at 1.1129. This has been dragged down a lot. We are looking at, that's 300 pips minimum. So unless you're doing it from, a swing perspective, even from a swing perspective, this is a bit much for the current situation. I'm not going to correct things. It's up to you guys, but just make sure that you trade with stop losses. We were looking at short positions since the past 2 weeks, so this is something that has been going on for a while, right? I just don't like hoping when it comes to trading. To me, when you start hoping, that's a problem with your trade, and you should review it. Okay, we'll come back to dollar yen. We already take a look at dollar yen. Euro USD, we took a look at Euro USD just now. If you missed it, do rewind the session. This is actually the first thing I would talk about. I'm going to take a look at Euro AUD. I have lost all my money in gold. I want to be a student. Yeah, I mean, the webinar is free for everyone. It's there. All right, be a little bit more cautious with gold, guys. Euro AUD, long position 1.45, 1.459, 1.459, 1.459, which is there. Be a little bit more cautious with Euro AUD. This is actually below the Ichimoku cloud. That's one, and I think this is close to 61.8%. I know Miss Mary 89 it's a scalper, so this might not be for everyone. But for everyone else looking at the hourly perspective on the Euro AUD, this is reaching the upper limits. It could go a little bit higher towards 78.6, but that could be potentially the cap there. This is testing Ichimoku cloud. There is a very thin portion of the Ichimoku cloud until the next 1, 2, 3, 4 hours. The next 4 hours, we could transition above the Ichimoku cloud. That could change a lot of things, but I think this right now for Euro AUD, It will really depend on Euro USD. But you know, comparing Aussie USD and Euro USD strength, I think Aussie USD is stronger than Euro USD. So yeah, Euro USD, I think we're done with the correction. I don't know in what context, but from the hourly perspective, I don't think it's a good time to jump in on Euro AUD. We are right in the middle of a correction. We're testing 61.8%, so that's a lot of risk there. If you do want to go long, your stop losses is actually going to be all the way down here, right? It's just not ideal. If you want to go short, you know, your stop losses, it's also about halfway through, which is up there. In terms of target, yeah, you could be looking at about 1.45. So kind of in the middle right now for Euro AUD, so not a great one to take on today. How can you be my student? I don't take students. I do my outlooks for free. All the contents are for free. I don't charge. As market is heading towards long weekend, do you think the US data released tomorrow will be relevant? US tomorrow is what? I think retail sales number tomorrow from the US. Is it going to be relevant? I don't think retail sales number is relevant anymore because we know how hawkish the FOMC is. We got the PPI numbers come out. We got the inflation numbers come out yesterday. I think that's enough to drive FOMC into a more hawkish stance. In terms of this week's number, inflation or retail sales number, inflation number are more important. That was out yesterday. It was much better than expected. I think core inflation was less than consensus, but it was still high. Okay, tomorrow I think the main focus will be on ECB. Is the market going to move tomorrow? Yes, it's going to move a lot because I don't know what the ECB is going to be. They're not going to hike rates. That's for sure. They cannot hike rates because they're still on. They still have their asset purchases on. They can reduce their asset purchases or they can cut it off tomorrow. If they cut it off tomorrow, then it's going to be great for euro. But yeah, that will be, you know, really speculative for ECB. And I don't like speculating on ECB. I think a lot of you guys know what happens in the past 2 months when people speculate on ECB. They got smashed really hard. Okay, we talk about Euro Yen. We already talked about Euro Yen, and I much prefer to go short Euro Yen. Now, in terms of risk reward ratio, you're not risking a lot, but risk reward ratio is great. Okay, I haven't taken a look at gold. Do you think EU daily potentially double bottom? Euro USD daily double bottom around 1.0805. Yes. I'm seeing that potential, but I don't really like to use double bottom on anything. I just want to look at 1.0805 as a strong support, but below that it opens up a lot of room to the downside, but for now this is being held off by 1.08. One of the few key reasons why I'm actually a little bit suspicious on whether or not the dollar strength is going to continue is it's partly because of Euro USD. It's just severely oversold at this point in time. I think we are due for a little bit of a technical correction, but is it going to go back up to 1.1129? I don't think it's going to go all the way up to 1.1129. It might go back up to 1.09, 1.0950, and that's okay considering where we are with the Euro USD and how strong the US dollar is going to be. But in the short term, I think we might see a little bit of a correction. I think we might see a little bit of a bounce from 1.08 on Euro USD. Good. Scale out. All right, we'll take a look at gold and oil. If you have $1.34 in your account, can you trade with it? I'll be honest, I think that's a little bit tough. And I'm not here to give you financial advice. So Fed, Bank of England, ECB, all the news are hawkish. Which one is stronger than the others? FOMC, obviously. Bank of England, not so much. ECB could be a surprise for everyone. In terms of whether which one is stronger after the FOMC, FOMC has the most impact. ECB could overtake Bank of England tomorrow, just because they have, they released their inflation data earlier than UK. UK just got released today. US just got released yesterday. ECB could announce something about their asset purchases tomorrow. So I think in terms of central bank announcement, I think tomorrow's ECB, it's much more important than sticking on to Bank of England, whether they're going to hike rates again or not. Okay. Or all correlated pair would just be range bound. No, I expect a little bit of a shift up. That's why I'm okay with Euro Yen. I'm not okay with Euro USD yet. I think tomorrow's event, I just don't see that opportunity happening on the going short Euro USD. If you want to go short Euro USD, your stop loss is going to be at 1.09. It's just way too high. Again, I much prefer to go long. Just having a stop loss below 1.0795. Okay. Are your signals on this live? I'm pretty sure this is live. This is not a recorded session. All right. We'll take a look at commodities, and then we'll open up for any questions because we only have like 30 minutes to go. Let's talk gold. Right now, in terms of whether or not you're wondering why is gold bouncing up and stuff like that, we got strong support at 1900, 1920. Now, in terms of the hawkishness of the FOMC, until they hike interest rate, it's not going to have much of an impact in gold. So let's be clear. You can speculate, you can price things up. Gold is not going to get affected until they hike the interest rate. And that's not going to happen until, let me just pause for a little bit. Okay, they're not going to hike rates until May. You have 1 month. Everyone has 1 month, okay? Taking a look at this one here, is it a sure sign gold is going to go way higher than, 2075? Well, unless, things gets worse in Ukraine, Russia, which things are still there, right? There's still no peace talks and whatever not. So if you're wondering what's going on with gold, why is FOMC being hawkish, gold is still going up, or, it's not really going down? Because it won't go down until Fed's hike, okay? And that's my answer to that. You can speculate, you can do whatever. Gold is just different. It's unlike the currency market. This is a commodity market. Currency market has not priced in how hawkish the FOMC is. Gold market has priced that in. Now, in terms of range, it does break above 1950. So from a technical perspective, now if you take a look at my outlook, I did mention that gold is pretty much trapped between 1920 and 1950. If it does break above 1950, which is what happened on Monday, which is there, that could track higher for gold, okay? Now, is it above range? It is above 1950 in terms of support and whatever. It's going to be at 1950, and then we have 1920. But for fundamental reason, if you want to know from the economic perspective, this is different. Commodity market is not the currency market. The currency market has not priced in the hawkishness of FOMC. The equity market and commodity market are more prepared than the currency market. Okay, so let's just be clear on that one. Now, in terms of gold, my outlook does state 1920 and 1950. You missed out on the outlook. It's there every Monday. Don't get lazy, just watch it. It's only about 10 minutes to 12 minutes. It's not going to be long, but it'll give you a kind of a guideline to what's going on for the week. In terms of the resistance, if it does break 1950, we do have you know, 1975. We do have 2000. I'm looking more at 2000 for support and 2000, sorry, resistance at 2000 and 2050. Is it done from a daily perspective? It's not done yet. Could gold track higher? It could potentially track higher. Okay, let me just pull it out from the hourly perspective. You know, there's a lot of support going on here. We got 1920, leave 1920 there. You still want to have 1920, you want to have 1950, but if you want to track this up, you actually have a strong support trend line that's going on at about 38-degree angle. So this is actually a proper trend, at least on the hourly perspective. Now, if you're looking for an opportunity to jump in on gold, there's actually a potential for this to be forming an ascending triangle. Just keep an eye out on that one, about 1978. So if there's an hourly close above 1980, then you could potentially look for a long position in gold. In terms of stop losses, you got two. You can have it 1971. I much prefer to have it at about 1962. In terms of target, you could be aiming for 2000, and that's for gold. Okay? So this is a different market. Don't lump in every asset as the same market. Commodity market are different. The bond markets are different. The equity markets are different from the currency markets. So just don't lump it in. Okay. What push gold higher? I think from a technical perspective, a lot of people just want to jump in on gold before FOMC does hike. When FOMC does hike, I think that's going to have an immediate impact on gold. Right now, you're probably looking at the last bit of strength. When we say people are not looking at gold war, maybe you are not, but a lot of people are still focused on the war. I still do focus on the war. I'm still reading up news for a potential peace talk, because that could create, a turnabout in the market. We just haven't seen that. I think the war has been prolonged. It's just that people watch it for entertainment. I think a lot of people are really suffering right now because of the war. The economic impact is huge. It's just not recorded yet. Don't forget that the war started in March. We are right now in the middle of April. We don't really have data from March yet. Just to be clear, all the data from March are not out fully yet. So we don't know how bad it is. Plus, the data from March doesn't include the prolonged 2 weeks that we have right now. So, the war is still there. It's just not out there in the headlines because people just tend to just move on. But we're still monitoring the war. Okay? As a trader, you should. Right. Oil prices, stay clear from oil. We're not really done yet. Even if it does break that support trend line here, it does move back in again, so I can clear this off. But I want to be looking at $100 in terms of support for UK oil or XBR. This is a strong support price on the daily. Is actually back within the Ichimoku cloud. So, if it's time to jump in on oil, I'll be the first one to shout the thing. But right now, oil is a no-go. It's actually within the Ichimoku cloud on the XBR. It's also within the Ichimoku cloud on the XCI. In terms of support, we are still looking at 100 as a pivot. The price is just pivoting around 100 right now for oil. So, stay clear of oil. I don't think it's time to go in long or go in short. I have a position. I don't like trading oil for short-term trades. I think oil should be for position trades or swing trades only. It's not great for scalping. Too much of a risk. Okay, but if you want to know the hourly outlook on oil, yeah, maybe you can scalp it to 103, 105, but you are going to be capped at about 105 for XCI. Just keep that in mind. Can it go towards 105? Yeah, it could go towards 105. What do you want to have your stop loss? You don't want to have it any lower than 100 because moving below 100 is going to trigger a lot of stuff. So if you do want to go long on oil, that's your range, right? You could go for 105, but make sure your stop losses are below 100, nothing further than 99.75. Okay, so short-term traders for oil, it's there. I'm not taking it, but it's there. If you want to take it, you can trade the range if you want. Just make sure your stop losses are not lower than 99.75. Do I have Any special settings for Ichimoku Cloud? No, it's standard 926.52. So it's just standard. I don't tweak Ichimoku. Right, Hosoda Goichi took what 30 years to create this, and I don't think it's right for everyone to just tweak it. All right, guys, focus on the chat. Okay, Bitcoin. I think there was some stuff. What is the time frame currently on set in all these trades? Hourly. It's there on the background. It's on the hourly time frame, by the way. All right, Bitcoin. Last few rounds of questions. Okay. Bitcoin is a tough one. I would want to say this is more in a very similar situation as Eur USD. Right now, you want to focus on one. That is 4,000. Let me just remove everything. You want to focus on, sorry, not 4,000, 40,000. This is your key level for the week. I'm not looking at it from a daily perspective, because if you take a look at this one here, how flat it is on the Ichimoku Cloud, where the Ichimoku Cloud is actually flat at 40,000. You want to be cautious about 40,000, not from a daily perspective, but from a weekly perspective. If it does close below that, you know what's going to happen? It's actually going to transition below the Ichimoku Cloud on the weekly. Now, if you take a look at it from the daily, we're still looking at 40,000 as a pivot for this one. If you take a look at it from the hourly perspective, then I would prefer to go short Bitcoin. Not really looking for an extension at this point in time, though. I do want to keep an eye out on this resistance trend line. So right around there, that's pretty much the limit of how far I'm going to place my stop losses in terms of target. It's hard for me to aim anything further than 39,000 at this point in time. Again, I do not short Bitcoin, just as a disclaimer. I do not short Bitcoin. I do not I hold Bitcoins, right? I don't really short Bitcoin for short-term profits or whatever not. So just to clarify, I do not intraday coins. I'm just a long-term position holder for coins. Do I want coins to go up? Yes, I do want coins to go up, but current situation is that we're looking at 40,000. If we are below 40,000, and we could see further progress to the downside below 40,000 in terms of intraday movement for Bitcoin, then you could be using this extension on the hourly time frame. That's gonna give you 39,000 at 127.2%. So that's pretty much it for Bitcoin. Nothing much. I don't think it's time to go in long or hold any position for cryptos at this point in time. And I think this will be the case for the rest of the month. All right, US 30 and Nasdaq. And we can wrap it up after that. Okay. US 30 dailies within the Ichimoku Cloud. Look, I think the overall market condition for US 30 is that, as I said, equities are much better in terms of pricing in how hawkish the FOMC is. US 30, I think we're still looking at support around 34,000 to build up, and it's on the daily time frame. Now, if you take a look at it from the hourly perspective, then yes, we could see a little bit of a push lower towards 34,000, but at this point in time, you're looking at 34,100 to 34,000 as support building up for US 30. Are prices going to bounce up? I think so, yeah. As long as there's no daily close below 34,000, I think US 30 is actually well positioned. This is much better in terms of when it comes to the equity market. they're well prepared for the FOMC. The currency markets are not prepared for it, but I think the equities market and the commodity market, they're much prepared for it. So yeah, I mean, if you take a look at this one here, I don't want to go short US 30. I'll be looking to go long around 34,000, 34,100 bounce. But if you do want to go short, I mean, it's your choice, right? You are pretty far from your stop losses, because if you do go short right now, your stop losses are going to be here. Your target is just going to be there. Risk reward ratio is not that great. I much prefer a scenario where this one come and retest 34,100, 34,000, bounces up. You know, even if you go for a correction towards 34,400, it's just a much better proposition than going short on US 30. You know, I could be going on 34,100. It's just going to give me a much better risk reward ratio. Yeah, we talk about pound USD and pound yen. You jump in an hour late, but yes. So let's talk about Nasdaq 100, and then we'll take a look at the rest. Nasdaq 100, I think we're at the lower end of the Ichimoku cloud support. We're still going to be pivoting about 14,000. In terms of correction, we are looking for a hidden bullish divergence potentially. Well supported until about 13,800. Just keep a note on the 61.8%. Nothing much to do. You are going to be looking at a potential bounce back up above 13,800 before looking for a long. I much prefer a long than a short. And again, in terms of risk, my risk is just too much. If I were to go short right now, I would prefer that price closes about 14,000 on the daily and then go long Nasdaq. Okay, pound USD. Last one before we wrap it up. Pound USD double what? I'm not looking at a double bottom. I don't think we have a double bottom for pound USD. Is there a potential bounce from 1.3? Yes. I'm looking at that potential, but it's gonna fall into the same scenario as the Eur USD. If the two of them are okay, then I'm okay. It's just that we have inflation number that comes out that was high on the UK, but we haven't seen price transition above the Ichimoku cloud. Therefore, if you're planning to go long on pound USD, make sure it's actually above 1.3025 before going long on pound USD. In terms of double bottom, I just do not observe a double bottom on pound USD. I don't see that. Okay. Okay. Take your, I mean, I'll be frank. I mean, if you want to be rude here, I can be rude too. If you are being racist, take your racist comment somewhere else. We just don't need that. Okay. Just going forward in the future for everyone else, let's focus on trading and just be on trading and don't be political. Okay, we talk about gold. We talk about every other stuff. If you guys missed it, it come in late, about an hour late. Review it. You can rewind it. It's on recording, and that's pretty much it. Okay, guys, we'll wrap it up for tonight. Good luck for your trades. Don't forget we have ECB tomorrow. Again, ECB's event tomorrow. You need to pay attention not on whether or not they're going to hike interest rate, because they are not going to hike interest rate, but they can cut off their asset purchases or reduce their asset purchases. Are they going to cut it off immediately? I don't think so, but they could potentially reduce it. And both of them are going to give a more of a hawkish tone towards ECB. We could see a potential snapback on the euro. All right. Have a great night. Stay safe. Enjoy your holiday. I'll see you next week.